Welcome to readtheticker.com. Today we're going to talk about another Jesse Livermore signal based on equities, a pivot point on the NYSE. In a previous video I talked about Jesse Livermore signal on gold. You can find that by searching readtheticker.com on YouTube, RTT TV, and you'll see it down here, Jesse Livermore gold trading signal. Pretty much the same sort of logic is going to be applied here. Now the website, which is excellent talking about Jesse Livermore, is jesse-livermore.com, and you can learn about his thinking and trading signals is down here, where my cursor is. Simply put, as where price approaches previous support and resistance, how does price react? Does it continue the trend? Here, continue the trend down, or does it reverse? So it's a major decision time when previous resistances approach. Now, Jesse Livermore became an expert in studying stock and price action when price approached the previous support or resistance. Now, Richard Wyckoff, which is I'm a great fan of, learned a lot from Jesse Livermore. A lot of his studies about how price reacts around support and resistance. It's even more critical when price is approaching all-time high support or resistance. So have a look at that, a bit of a read. It's, if you're interested in stocks, just that site's an excellent site to understand what a person before charts and computers and all we had was a tape to work out what was going on. Okay. Here we are with the NYSE composite index. Here we have an all-time high situation. Now, in all other indexes, I call them popcorn indexes. That's the S&P 500, the Nasdaq, the Russell, the Dow Jones. Pretty much have all broken to new highs, thinking that there's some sort of fantastic bull market going on. With in truth, the NYSE composite index is 2,000 stocks, made up of a variety of stocks, not just sort of motivated by financials or technology. Here it's approached all-time high, and it never really broke through, but it's quite significant that we've got a significant fade. So whenever price approaches previous resistance, here's another example here with the other red liners, price approaches previous resistance, it normally goes right up to it, kisses it. And there's the first fade. Now the reaction that happens on the first sell down or the fade is very important. Here you can see it was quite an aggressive sell down. I remember it's quite high volume. And then we had the devaluation of the US or whatever caused the sell-off. My point is here we've had a shot across the bow, a rather aggressive sell down. So what happens in the next couple of weeks is going to be very interesting. So in truth, I don't believe you can call the equity markets have broken out to all-time highs when you look at the true indexes. The other very important factor at the moment, people think, well, equity markets are based on fundamentals, growing economy, earnings, and sales, and all the rest of it. Yes, they are based on sales and how well a company might be valued, but there's never really a true correlation to a new high in the stock market relative to valuation. They're all over the place. The true test of an equity market, like in any market, is the ability to buy stocks, and that simply means how much finance is available to buy the stuff. It always comes down to finance. Easy finance, tight finance. Cash available, debt available. And as you can see down below here I've got the NYSE margin index, which is a percentage of margin within the accounts held with all NYSE stocks. Now this is also an all-time high for margin. This is the previous all-time high here. Now you can bet your bottom dollar if we get a serious sell down here, margin will be crushed. For example, here's the previous time margin was crushed and it never really recovered. So that sell down here where my cursor is. Here's my drawing tool, screen marker, make it a little bit easier. the sell down from here was a crushing margin. Everyone just reduced margin dramatically. Then we had pretty much a new high here, but margin did not go with it, so that was pretty much a warning of a top. And this rally here, there's no finance behind it. People were just using that to sell into. So what happens over here and over here with margin? Everyone will be looking at. So if margin shrinks, you can bet your bottom dollar an all-time top is up. It's all about finance, folks. It is true that you might sort of say, well, the money's going in the markets because the finance has been made easy. Well, this particular time, the finance has been made easy by the Fed with low interest rates and juice for the big equity banks and people to borrow by taking US dollar cash, say $1, turning it into $5 by borrowing on the yen, and then coming back and buying US stocks, which is, of course, if the trade reverses and the yen strengthens, well, that means the asset price is going to be reversed rather quickly. It's a very fragile environment when the finance has been called in. So, saying that, if you're a bit more sophisticated, keep an eye on the USD JPY. If that strengthens dramatically, you know the equity rally is over. Another interesting thing which there's a possible market top. Bert Doman of the Wellington Letter wrote a recent article called "The Most Reliable Indicator of Approaching a Market Top." And he talks about this. I think you can see the link up there. Forbes. Just do a Google search on that. You'll find that okay. Where he gets down, he talks about sentiment. May not be a timing indicator, but it gives you how extreme it is, how stretched money managers are. In a rubber band sense, either one way or the other is going to get a top. What's very interesting, he says, something very interesting down here is that, here we are, this is the paragraph. I've put out in the past, if you remove earnings of the financial firms S&P 500, there will be no earnings growth in 2013. That was last year, and equity prices went up. We all know the finance companies, or within the S&P 500, have had their balance sheets rather smoothed over with reversing of mark to market. They're sort of marked to whatever you like. So those earnings are pretty much cooked. The hardcore earnings coming out of companies like Caterpillar, IBM, McDonald's, Walmart, those sort of companies which have exposure to global growth, just haven't been performing that well. When you read this article, you're going to realise that Bert Doman is bearish on 2014. You see some sort of adjustment to reality. So pretty much worth a read of that article. So what to expect here? So back to this, we've got a sell down. What money manager? It's very unlikely in any equity market you get a V reversal. It's a reversal that just keeps on going. More likely we're going to get it's going to be a pause and some sort of bounce. I don't know how deep this rally is going to go. We get some sort of bounce, some sort of distribution over here. For example, the previous sell-off went all the way down to, wow, 9,000. So 9,002. Just imagine if that happens. But to see what happens, we may even get, the Fed pushing up a little bit higher. So can't say I'm calling a top. I'm just saying that it's very, very risky. In the next couple of weeks, they're going to determine your success in the equity market. Now, Jesse, be watching for the sell down, a bounce, and then a fail. So something like this. So a sell down, a bounce, so a lower high, a lower low here, and then action that showed some sort of sell-off here. That'll be a perfect Jesse Livermore pivot point trade. Here we've got a sell-off, some sort of fail here, and then some real selling coming into this area here. Which basically means is that it's now January, February, and early March. It can become very interesting. Thanks for watching.